My name is Saurav, and my student ID is YEG3019. And today I'm going to discuss individual corporate accounting presentation, which I have done on the company, which name is JB Hi-Fi. We're going to start with the introduction, which it includes the summary of the presentation. So it is about the tax treatments and different figures related to tax report in annual financial statements. There are several tax workings in financial statements of company JB Hi-Fi. The tax expenses, tax payable, tax paid, and deferred tax assets or liabilities. These are the few terms which we're going to be discussed further. Critical concepts which one must understand, like how to analyze the differences in tax and corporate accounting systems. Moving forward, we have accounting profit and taxable profit. So we have to understand the terms, what is accounting profit and what is the taxable profit. There's a difference in these, like accounting profits are those determined using different accounting standards and accounting frameworks. On the other hand, taxable profits are those upon which taxes are calculated. So you have the understanding of these both concepts. Moving forward, recognition criteria of deferred tax assets and deferred tax liabilities. What are the recognition criteria? Which are the standards? In JB Hi-Fi, the recognition criteria for deferred liability is via using balance sheet liabilities method. And the provision is created for deferred tax assets and liabilities using financial reporting rules and for tax purposes. Deferred tax is calculated using the tax rate which is expected to be charged. So from here we have the recognition criteria of the standard for deferred tax asset and deferred tax liabilities on a JB Hi-Fi. In next slides, we're going to discuss about the JB Hi-Fi tax expenses in financial statements. As we discussed in our individual assignment as well, the current tax expenses in the financial statement is the tax expected to be paid. Income calculated for the period using the current tax rate given by Australian taxation authorities or the Australian taxation bodies. The current income tax is 109.5 million for the period reported in the income statement, which we have discussed. While current tax was 117.9, deferred tax was 8.4 million. In the next slides, the company tax rate times difference and its reasons. What are the main reasons for the company tax rate times? The first one is the current tax reported in financial report is 107.9 million, which contain deferred tax liability of 8.4 million. The tax rate was 30% and the taxable income is 109.3 million, which results 107.8 million, as we can say it as the 30% of the taxable income. On the other hand, tax reported in income statement is $100.9 million. To be more clarified, these terms we are using in US dollars, which include the amount of 3.2 million US dollars of expenses. So in the next slide, we're discussing about the current tax assets or income tax payable. There is no current tax asset record in financial statement of JB Hi-Fi, which I have found in my research. However, current tax payable is 5.1 million in 2019 from my findings. It was 9.6 million in 2018, last year. The current tax payable is the amount which is payable within current financial period. Tax payable is the amount which is outstanding in current period. expenses in income statement and income tax paid in cash flow statement. So from the heading, it is clearly defining that we are discussing about the income tax expenses in income statements and income tax paid in cash flow statements. This is quite a difficult. This was quite difficult for me when I was finding these. But on my findings, I got like statement of cash flows record the income tax paid is part of operating cash outflows. Some tax are related to investing and financing activities, and the total amount of tax paid is recorded as cash outflows. The tax paid is 116.4 million, while the tax expense is 100.9 million US dollars. Now we're going to discuss the concept of temporary difference and permanent difference. The temporary difference are those which are created due to the tax base of an asset or liability to be different from its carrying value. So it's all depend upon the carrying value of the tax, so the assets and the liabilities. What is the carrying value of the tax and liabilities? Carrying value is the amount recorded in accounts, which is the definition of like carrying value, and based upon international financial reporting standard, which follows accrual basis. So we have to follow some Australian accounting standards as well. As concluded, to be the conclusion of this whole presentation, I can conclude that Abotask has assisted in development of taxation concepts regarding different complex working of taxation. The taxation and accounting rules are different. Taxation legislation paid attention in more real figures of financial data, which was tedious task. The mayor relying upon the financial data provided by management. So management is the core body of providing the financial data to the interested parties. That's all about the presentation, and thank you so much for listening.